Hey everyone, it's Abdul Samad Al-Sheikh and welcome back to the channel. I'm so excited to have you here with me today. Today we're diving into the exciting world of Forex trading. Whether you're a complete beginner or someone with a bit of experience, there's always something new to learn in this dynamic field. It can be a little confusing sometimes, so we'll break it down together. We'll go step by step to make sure you understand the basics and some advanced strategies. Let's be honest, we've all seen those ads online showing fancy cars and saying you can get rich quick trading Forex. They make it look so easy, like anyone can just jump in and start making a fortune overnight. But the truth is, Forex trading is different from how those ads make it look. It's not a get-rich-quick scheme. It requires knowledge, patience, and a lot of practice. It can be a good way to make money, but you have to be careful and understand the risks. There are no guarantees, and you need to be prepared for the ups and downs. In this video, we're going to look at some of the wrong ideas people have about Forex trading. We'll debunk some myths and give you a clearer picture of what to expect, and talk about what it really takes to succeed. We'll share some tips from experienced traders and discuss strategies that can help you navigate the market more effectively. So get ready to learn, and let's separate fact from fiction in the world of Forex. By the end of this video, you'll have a better understanding of what Forex trading is all about and how you can approach it with the right mindset and tools. Okay, let's talk about that Lamborghini you see in those Instagram ads. You know, the ones they promise you can have that car, that lifestyle, all by just trading Forex. It's a tantalizing dream, isn't it? But let's dig a little deeper. The biggest myth about Forex, and really any investing, is that it's a fast and easy way to get rich. These ads make it seem like you can just jump in, make a few trades, and suddenly be rolling in cash. But the reality is far different. You know those ads, pictures of expensive cars, amazing vacations, and people living their best lives. They paint a picture of effortless wealth, all while relaxing on a beach, supposedly all thanks to Forex. It's a compelling story, but it's just that, a story. But if something sounds too good to be true, it probably is. These images are designed to lure you in, to make you believe that you can achieve the same with minimal effort. Forex trading takes time, hard work, and lots of learning. It's not a get-rich-quick scheme. It's a skill that requires dedication and continuous education. It's not about randomly picking trades and hoping for the best. Successful traders spend hours analyzing charts, studying market trends, and developing strategies. Those stories about people becoming millionaires overnight, they're the exception, not the rule. They don't happen often, and they're used to get your attention. These stories are marketing tools, not a reflection of the typical trader's experience. The truth is, making money consistently in Forex takes time, being patient, and really understanding the markets. It's about making informed decisions, not gambling, and really understanding the markets. You need to know what drives currency values, how global events impact the market, and how to manage risk effectively. Don't believe the hype about getting rich instantly. Those flashy ads are distractions. Focus on building your knowledge and skills. Think of Forex trading like a business, not a lottery ticket. It requires planning, strategy, and a lot of hard work. That's how you'll succeed over the long term. By treating it as a serious endeavor, you can build a sustainable and profitable trading career. Another myth. Forex trading is easy. Many people think that they can just jump in and start making money right away. Opening an account and making a trade might seem simple, and in fact the process of setting up an account and placing your first trade can be done in just a few minutes. But making smart trades that earn money? That's a different story. Forex trading is complicated. It requires a deep understanding of market trends, economic indicators, and geopolitical events. Lots of things affect it, like the world's economy, what politicians are doing, interest rates, and even natural disasters. These factors can cause sudden and unpredictable changes in the market, and how people feel about the market. Market sentiment can drive prices up or down, sometimes irrationally. It's a complex web of influences that you need to understand. To be successful, you need more than just luck. You need to understand how to analyze the market, manage risks, and be very patient. Patience is key because the market doesn't always move in your favor right away. Think of it like basketball. Learning the basics is easy, but mastering the game takes years of practice, dedication, and a deep understanding of the strategies involved. Losing trades will happen, but learn from them, improve your strategies, and keep learning. Just like a professional athlete, a successful Forex trader is always honing their skills, studying the market, and adapting to new information. Let's talk about those guaranteed profit strategies you see online. Seriously, if someone says they have a surefire way to make money in Forex, run away. There's no such thing as a guaranteed win. These people selling secret systems usually just want your money. They take advantage of people wanting to get rich quick. But there's no easy way to make consistent profits in Forex. Instead of falling for these tricks, focus on building a good trading strategy based on research, managing risk, and understanding how the market works. And remember, if it sounds too good to be true, it probably is. Now that we've busted some myths, let's talk about what actually works. Fundamental and technical analysis. These are your two best friends in Forex. Fundamental analysis is like looking at the big picture, understanding the economies that make currencies move. Technical analysis is about studying charts and using tools to find patterns and trends. Using both together gives you a complete view of the market. It's like having two sets of eyes, one on the big picture and one on the details. You might use fundamental analysis to see which currency is strong, and then use technical analysis to find the best time to buy or sell. Forex trading is exciting because world events can create big opportunities. It's like the market is alive and reacts to everything: elections, natural disasters, economic reports, and what central banks are doing. For example, if a report shows lots of new jobs in the US dollar might get stronger. This is because investors want to buy dollars, thinking the Federal Reserve might raise interest rates because the economy is doing well. Make it a habit to follow the news, watch economic calendars, and know about world events that could affect the markets. Now let's talk about trading indicators. These are tools that help you analyze charts, find trading opportunities, and feel more confident. But remember, indicators are just tools, not magic. They can give you helpful information, but they shouldn't be the only thing you use. The key is to understand what they're telling you, how they work in different situations, and how to use them as part of your trading strategy. Let's talk about something super important: risk management. Think of it as a safety net, protecting your money from losses, which happen to everyone. The first rule: never risk more than you can afford to lose. Forex trading uses leverage, which can make you more money but also lose more money. That's where stop-loss orders come in. They automatically close your trades if the price goes too low, limiting your losses. Another important thing is diversification. Don't put all your eggs in one basket. Trading different currencies can help if one trade goes bad. Let's talk more about managing your Forex portfolio. Just like you wouldn't put all your money into one stock, don't put all your money into one currency pair. Diversification helps manage risk and can improve your returns. Diversifying in Forex means trading different currency pairs that don't usually move together. This way, if one pair is losing money, another might be gaining, balancing things out. But diversification isn't just about avoiding risk, it's also about finding different opportunities. The key is to find a balance that works for you and your goals. The Forex market is always changing. New economic data, world events, new technology, it all affects the market. That's why you should always keep learning. Read books, watch webinars, follow Forex experts, and stay updated on market trends. And just as important is adapting. The Forex market is fluid, so your trading strategies need to change with the market. Learn from your wins and losses, and use them to become a better trader. So, let's recap. We've busted some Forex myths, talked about risk management and diversification, and why you should always keep learning. Now let's talk realistically about Forex trading. Forex trading is not a get-rich-quick scheme. It's about hard work, dedication, and understanding the markets. Before you even start trading, learn the basics, understand the risks, and make a solid trading plan. Remember, knowledge is power, especially with money. I've been in real estate for a long time, and there are no shortcuts to success. Just like building a real estate empire takes time, building wealth through Forex trading requires patience, discipline, and learning from mistakes. Forex can be a powerful tool for making money, but be realistic and educate yourself. If you're willing to put in the work, learn from experience, and think long-term, then you're on the right track. So do your research, find a strategy that works for you, and remember, the best investment is in yourself.